Thank you, and good afternoon, ladies and gentlemen. Matsa Resources, just a brief overview there. We're just shy of 750 million shares on issue. Today we're at 7 cents, around about 54 million market cap. We've got a resource of 949,000 ounces at 2.5 grams in the eastern goldfields of Yilgarn. That's about 2.5 to 3 hours north of Kalgoorlie. A very good mix of commercial and technical skills on our board, and you'll see there in terms of ownership there, we've got a good support base from BNP Paribas, been hanging around the 20% mark for quite a number of years. Deutsche Balaton have creeped up a little bit over the last couple of years as well, good support base there. Bulletin Resources recently coming on board, and just general shareholders there at 38%. Matsa Resources, we call ourselves a gold exploration company with a lithium twist, but at the moment, today, I'll talk just about the gold. So it's been a very, very busy year for Matsa this first half of the year. Certainly a culmination of a couple of hard years of work with Matsa Resources. I'm very, very confident Matsa's actually on a very, very steep growth curve. We put out a maiden resource reserve at Devon earlier this year of 42,000 ounces, and in early February into March we were subject of a takeover bid by Petronas. In January and February we did some drilling at Fortitude North and returned some terrific results there, and I'll take you through some of that as well. The feasibility work at Devon has culminated in us starting operations at that project last quarter. Our first trucks of ore were delivered to the ROM in June, and the project is currently in operation. Importantly, we've got an asset level transaction or corporate transaction with a company called Anglo Gold. I'm sure many of you have heard about that, and I'll take you through that a little bit later as well. And in terms of Devon, as I said, we're operating there. We have an ore processing agreement in place. We've got a mining contract in place. We've got a haulage in place. Everything's happening there. So since January last year, we're around about 2.5 cents a share. We've gone up to 7.5, so around about 3 times in the course of 18 months or so. So, as I said, we're on a steep growth curve, and that is underpinned by the operation at Devon starting to produce or mine and produce gold, the Anglo deal, and certainly some terrific exploration that we have at Lake Carey in our Western Australian project there. Just doing some grade control drilling there, preparing for the pit. As I said, it's all coming along. We've got all the facilities are built on site. We started blasting in early this month as well, exposing some of the ore. The ore comes to surface, as you can see there from that middle picture down the bottom in terms of historical shafts. Some of this stuff was mined back in the 1920s, and as you can imagine, they didn't go out there for fun, so that the grades are quite good grades, and a bit of an ore mark up there on the left-hand side. As I mentioned, we put out a reserve earlier this year, and we've ticked off quite a number of milestones. Feasibility study was done, and that indicated, and I'll take you through some of the numbers there, we should be mining over 300,000 tonnes at just over 4 grams. Processing plant, so we don't have a processing plant. That we have a toll treat agreement with a company called FMR Holdings, who operate the Greenfields processing plant down at Coolgardie, so we'll be hauling our stuff down to there. So just finalising agreements with our haulage contractor, and our first ore campaign or processing campaign is scheduled for September. So we've got about 6 windows over the course of the next 18 months. Every quarter we'll process about 50,000 tonnes. This is the results of the feasibility work. You can see there, as I mentioned, just over 300,000 tonnes, a bit over 4 grams. That's what we expect to be mining. We expect by the end of September next year to be selling over 42,000 ounces, and at the current gold price, that's somewhere in excess of $200 million revenue. As I mentioned, we've got a market cap of just over $50 million. And you can see there those numbers. The all-in sustaining cost at its peak is probably a little bit short of $3,000 an ounce, which gives us a margin of $2,000 an ounce or so, which is still pretty good. Some of the key financials or some of the key metrics there, as you can see, mining costs of just a little bit below $60 million, haulage costs of 25, processing 26, and revenue, as I mentioned, just over $200 million. One of the key elements with regards to the mining contract is that it's an at-cost mining contract. It's open book. Anything that we feel that we can get done cheaper than the current contract indicates, we can substitute in. So that is a terrific position to be in, and the project is clearly a profit share process. We get 80% and the mining contractor gets 20%, so we don't lose a lot of value out of that. Just quickly, that's the mining plan in terms of the production, and just going into here, the gold sales. Like a lot of smaller pits, the best ore sales, the best gold production is towards the end of the mine life. Just very, very briefly, that's an outline of the pit in terms of stages. You can see there in the green, that's our stage 1. Stage 2 develops into the blue, the dark blue, and then we've got extensions to the northwest in terms of the pink and the light blue stages there. Metallurgy and processing, as I mentioned, we're processing at FMR Greenfields project, a mill down at Kilgardy, so it's a good outcome there. We expect about $75 a tonne processing costs. It's about 50% higher than what it was probably 3 years ago, but it's certainly well and truly in a good marketplace. Our haulage costs, including maintenance, we're expecting something around about $50 a tonne. We've got all the infrastructure in place. We already have a camp. We've got all the haul roads in place, and we've got a couple of airstrips nearby. I'll just skip this one here. That's the Red October camp. Lake Carey, the project there is subject to an options agreement with AngloGold Ashanti. They can't buy Devon, we're mining that, and they can't buy Fortitude North. We've put out a couple of announcements with regards to that, so technically they can buy the rest of that project. The value of that sale would be $81 million up front, with a $20 million trailing royalty. Now that trailing royalty is not based on a net smelter return. In other words, it's not after mining and processing. That $20 million is based on new ounces found, which is very, very important for us because Anglo are fairly aggressive in terms of exploration. So whilst that entire project, less Devon and Fortitude North, is subject to the options agreement, I don't think that they'll actually buy the whole lot. Having said that, Matsa has received $5.7 million in the course of the last 3 months or so out of that sale, out of that agreement. In December this year, they'll pay another $1.5 million to keep that going. June next year, another 1.5 to keep it going. And by December next year, it's pay up or walk out. Having said that as well, with regards to all of the fees, the 5.7 so far and the 3 million that are due over the course of the next 12 months, none of that is refundable if they walk away. And as I mentioned before, there'll be a further $20 million in trailing royalties based on new ounces found. Now, AngloGold have already indicated this next quarter what they plan to do is put POWs in place, so permits to work. They'll do heritage surveys, those sort of things, get everything ready on the ground to get out there and do some drilling. Fortitude North, it's a fairly newish discovery. I mean, it's 5 years old or so at the moment. I'll just skip on to some of the important bits here. It's a 1.7 kilometre strike system. Terrific exploration results there that you can see from 2023, all relatively shallow. The deepest drill hole there is around about 220 metres from surface in terms of mineralisation. Last year, or early this year, sorry, we did some drilling and got 22 metres at 9 grams there. You can see it's a new system in terms of the drilling that we completed in 2023. And in anyone's books, 22 metres at 9 grams is certainly worthwhile chasing up. So you can see there a long section, so that's looking towards the east, towards the west, sorry. We've got a series of stack systems plunging there to the north, to the right-hand side of the page. And the yellow dot there is at 22 metres at 9 grams from earlier this year. We went and did some more drilling in May, and you can see there another intercept, up plunge, 8 metres at 9, and certainly back up higher where we did the 2023 drilling. We got 10 metres at 6.6 grams. So very healthy intersections, and certainly very exciting in terms of exploration. What's next? Keep going with Devon Pit, get that first processing campaign completed in September, start generating some revenue for the company, keep going with the Anglo deal, push that through, and some more exploration. Thanks very much.